I think sometimes because we're very focused on, our expertise, we forget that the climate topic is much, much broader, and it's not just about risk, but also new opportunities.
Quite often in this world of catastrophe modeling, analytics, and insurance are quite inward-looking. And I was really delighted that Fathom have asked Kyra to come along and talk a little bit about what's happening, a little bit in insurance, but also in the sort of broader world. So Kyra, MSCI is quite a large company, but not everybody will have heard of it. So it'd be great just to understand what's your purpose in life.
So yeah, MSCI is a global provider of decision-useful data, models, and analytics. We provide solutions across indexes, but also private markets, real assets, and most importantly, climate data to financial institutions. And those financial institutions can be our insurance clients, but also banks, asset owners, asset managers, and wealth. So really servicing, I would say, the entire spectrum of the financial markets today.
Now, in insurance, the use of models is driven partly by capacity, partly by desire to stay in business, and regulation is a big driver. What's happening in the other world, in the other financial markets? What's the balance between they have to now do this versus they just feel it's better business practice and just therefore want to do more of it?
To be transparent, I think for many organizations, regulation was, of course, an additional push to adopt practices around climate risk management. But what I would say we see today is really a convergence of the things that you outlined. So it's really about saying, yes, there are minimum requirements I need to meet because of regulation, but regulation is really just setting the floor for me. It's about creating competitive insights, new business opportunities, and really better risk management practices by leveraging the climate data and models that we have at hand today. And on our side, I should also mention this, we've had, physical risk expertise in-house for many, many years, but we decided, as you said, to partner with Fathom and also Swiss Re to really elevate that to the next level and bring even more data and models to our clients.
Another big theme in insurance these days, another reason for getting analytics, is the whole around this adaptation and resiliency. Is that also important for your clients as well?
Yes, I would definitely say so. So I think while the insurance industry, because of the business model, has been maybe more aware of the aspect of adaptation and resilience for the last few years, what we see in the wider industry now is that indeed, for example, a portfolio manager who's focused on a specific sector wants to understand within my portfolio from the energy sector, for example, what are the most exposed companies to physical risk and what are they doing about mitigating and adapting to that risk. And here it's not about just having, very strong hazard models, exposure models, but also these people need to understand where are the companies that I'm investing in actually operating. So we also bring geospatial insights where we have asset level information that helps financial decision makers to understand, okay, I'm invested, let's say, in a UK-based company, but that doesn't necessarily mean that the key production sites, R&D facilities of that company are in the UK. They could be in India, in Switzerland, wherever, right? So having this location-specific assessment, which I think many of you are quite aware because you come from an insurance underwriting practice, is something that the wider industry is now adopting. And this is, I think, where the strong climate exposure hazard models in combination with geospatial insights are super critical.
And one of the challenges in insurance, and sometimes it's just due to the frictional nature of sharing data, sometimes because people choose not to share data, is getting that information out of the insureds, the corporates, the companies you mentioned. How does that compare to the world you're looking at? Is there more transparency and willingness to share that information?
I would say it depends. So, of course, there is a lot of disclosed data out there as well. It can relate to where companies are operating. Some information also around adaptation and resilience already, but I would say still rather limited. So, for example, to build our geospatial database, we have manual and, of course, also AI-enabled technologies that help us source information, but we complement it with third-party data sets. But then when it comes to the adaptation and resilience measures that companies are taking, to be frank, there is still limited information out there. But because financial organizations are starting to ask for this information as part of these engagement processes, for example, I think the corporates are also going to get under pressure to be more transparent about that going forward.
Right. I'm sure the insurance community could teach a few things to the financial markets about putting their clients under pressure and whether that works or not. But actually, just taking a positive angle on that, you talked a bit before about the investors asking for information. How much sort of collaboration? I mean, in insurance, again, we're very lucky in that the brokers, big reinsurers like Swiss Re you mentioned, are very motivated to help their clients in a kind of collaborative way in terms of things like mitigation. Do you see that happening to the same extent as a two-way flow of information in your clients?
I would say so. I think on the one hand, of course, let's think about a bank, for example, to also provide the wider picture. They, of course, also see new financing opportunities, new engagement opportunities with their clients to help them make their business models more resilient, right? More adapted to this new world where physical risk is unfortunately a reality, and to thrive in that environment. So yeah, I would definitely say there's collaboration. And then of course, there's also, as you mentioned earlier, increasing pressure from policymakers, right? So we see it here in the UK with, of course, the PRA consultation, but we also see it in the EU with the EBA guidance for banks, for example, where there is this ask to integrate physical risk, for example, into risk management processes, and that automatically means you need to start that conversation with your client.
And then you talked before about getting data from Fathom. You sort of alluded to a little bit of this using the AI and building your own data and tools. What's the balance for build versus buy for MSCI? So, I mean, as I said before, we've had in-house capabilities on physical risk for a long time. It also came, the enhanced capabilities through another acquisition that MSCI did in 2019, acquiring Carbon Delta. But those guys, for example, were also closely collaborating with academia, which we also still continue to do today. So, for example, some of our key research leads on the physical risk side, they come from the Potsdam Climate Institute in Germany. We have collaboration efforts with the ETH. So I think, generally speaking, there's an interest to have a collaborative approach, so either with academia, through partnerships, but then as we've also seen through some of the acquisitions. And clearly, I think the partnership with Fathom and Swiss Re really took us to the next level. We went from 15 hazards to now 28. So that's really huge and a big, big step forwards in the breadth and depth of that we can offer. And I think that is ultimately our objective. We want to have the best solution for our clients, something scalable, of course, and we know we need partners for that. And then just for all those in the room, insurers, and as you look across all of your different sort of market segments, what lesson or lessons do you think there are for insurers to learn from what's happening in other segments?
Yeah, we heard it a few times in the first part of today's event. There was this mentioning of scenario analysis. And I think this is really something that the wider industry has been adopting. So both asset managers, asset owners, and insurers, for understandable reasons because of the business model that they are in when it comes to underwriting, where you can change a policy on an annual basis, they have not necessarily been focused on it so much. But what I now see also with my insurance clients is that mindset is shifting. There is this acknowledgement that, with this rise in physical risk, uncertainty about what the future will bring, to stay in the business, these scenario insights can actually be very useful. And then second, I know tonight we talk a lot about physical risk, and that's the focus, but we shouldn't forget about the transition either, right? We have the tools at hand to actually also make sure that ideally we can still limit global warming to, a relatively decent temperature. And that also means that we can maybe avoid some of these future physical risks that otherwise may occur. So I also see other financial organizations, but also insurers, for example, tapping into carbon markets, right? There is a new opportunity for insurers to underwrite carbon markets. Insurers are launching carbon and nature-based solutions funds. So I think sometimes because we're very focused on our expertise, we forget that the climate topic is much, much broader, and it's not just about risk, but also new opportunities.
Yeah, no, absolutely. No, thanks for reminding us of that as we get towards the end. And then finally, for anybody who wants to learn more about what you're offering at MSCI, how should they learn about you?
Go to msci.com or make a visit in the London office. We're just around Bishop Square. My colleagues are nodding. That's the right address.
All right. Thank you for joining us tonight. Thank you very much.